Welcome! RoboCanada is an industrial robot manufacturing company that is looking to shorten its supply chain in order to reduce service time and increase margins due to the slowing growth in home markets. It intends moving its logistics hubs to one of the following prospective countries in Asia. The three countries where RoboCanada must open their logistics hubs are Malaysia, China and India. Let's have a quick look at each country. Risks have been divided into three heads of strategy, operations and safety risk. Malaysia is relatively risk-free in all the categories of risk for the past 7 years and close to nirvana. It stands out most in important risks such as trading across borders, corruption, credit availability and technical risk. Malaysia is an extremely safe country as it has low risk of political violence, diseases and natural disasters. It also ranks 18 in the aggregate ranking on the ease of doing business. For China, past trends in the risk room indicate reduction of both business and political risk to a medium level. China remains below the world median for most of the risk in 2014. Along with strong infrastructure and easy credit availability, international corporations see it as a positive destination due to cheap labor and potential economies of scale. Its proximity to established markets in Asia make it easier and cheaper for transportation. India is one of the fastest growing economies and slated to grow at 8% by 2017. Even though it lies above the halfway mark on the risk room floor, the recent positive trends and declining values of certain risks makes it more investor friendly. India is rich in cheap labor and boasts of all types of resources. Its strategic location and new government initiatives makes it an advantageous hub.
Cage analysis helps to understand the aggregate of India, China, and Malaysia against Canada and Britain. Culturally, all these countries have a decent number of English speaking population, though majority in China speak Mandarin. Administratively, the governments of these countries follow either factor or innovation driven growth. There are good ties between prospective nations and current nations. Geographically, the distance between the markets in Asia and Canada and UK is a lot more than that between them and prospective hubs in the same continent. Economically, FDI shows how prospective countries are seen as investor friendly, notwithstanding much higher GDP growth rates. AAA framework shows how RoboCanada's strategy will be focused in these new countries. In Canada, where labor costs are high, arbitrage strategy merits focus. Opening hubs in new countries requires R&D. Hence, the company needs to focus on aggregation strategy too. While aggregation is constant for this industry, a considerable amount of arbitrage is carried out, reducing labor cost to sales ratio on both the country basis and for the aggregate. The risk assessment matrix shows risk involved with adopting aggregation arbitrage. Reliable electricity is vital at an operational level. China and Malaysia fall well below the world median. India ranks 103 on the efficiency of electricity supply. RoboCanada can opt for a small captive plant run on local oil. Mitigating this would mean a steady stream of electricity keeping processes efficiently running. China and Malaysia have low information infrastructure risks and a high percentage of population who use internet as compared to India. However, India ranks number 3 in the world internet users and it constitutes the second largest market in the world for top websites.
All three countries have made efforts to reduce the burden of government in terms of time and money. China and Malaysia both have low risk values, but India has a slightly higher risk. However, its absolute value is still at the median, and also the new government has passed several new ordinances that favor the entry of companies. This will help companies begin operations quicker when they relocate. Human rights is an extremely pressing issue in the corporate world. Chinese laborers are one of the worst off in the world. This can be mitigated by ensuring good working hours, decent payment of minimum wage, and a good working environment. Not only will a company save money in litigation, but will also have a happy and more productive workforce. Quality of labor is particularly important for a company, and in all three countries, the risk falls around the world median. While the overall quality of labor might be average, the labor needed for the industry is more skilled and more in absolute value. If mitigated, better quality means more productive work. Prevalence of trade barriers is important as shipments may get caught up in tariff procedures. China falls just above the world median and India is a top outlier. It is of notable interest that India recently passed an act which makes tax rates uniform across the country. If mitigated, once again, movement of goods through the country and outside will be easier. When we step outside the risk room, we start by looking at some of the export and import trends in the industrial robotics industry. China produces over 20% of the total world supply, and that number will only grow. Furthermore, even Malaysia and India have seen growth in their supply. The contribution to the world total is still considerably small. However, the purposes for which industrial robots have been produced in the past in these countries match the requirements of clients in existing markets such as Korea.
There are several other extraneous risk factors to consider for due diligence which have been analyzed through a PESTO test. Political relations between two countries are important to business. This is the case for all countries except Russia, who recently had sanctions imposed on them by Canada for the Crimean annexation. All these countries have favorable economic factors such as price of labor, existing distribution of supply of robots except for Russia. Socially, the availability of labor tells us about the education level of population. All three countries don't have a high percentage of relevantly educated population, but in absolute numbers, it's enough for a new company to tap into. Technologically, transport costs play a huge role. All the countries are exceptionally close to the markets and have well-developed transportation infrastructure. Legally, it has companies if the law of the land favors their arrival. Countries like Malaysia are a dream for any company with almost little legal problems arising during the process. Countries like India and China are rich with natural resources and environmentally is synergetic if raw materials needed to run the hub are easily available. In conclusion, based on the risks given in the Zurich risk room as well as due diligence outside of it, China, India, and Malaysia are the three prospective countries where RoboCanada must set up its logistic hubs to reduce the supply chain, improve efficiency, and increase margin.